So let's start off with a basic question. What is per dime? So you guys remember when we were kids, we used to get a little allowance that we can use to spend in any way we like. So similarly, when we are traveling, it becomes a little bit cumbersome to keep track of all kind of receipts. So IRS says, you know what, we understand everybody when they're traveling, they run into some minimum expenses. So they came up with this per dime idea. It's basically a fixed allowance that you can use while you're traveling. Now, there are different ways to do this, but I'm going to more focus on foods and incidental today. You can also do it for lodging, but I think lodging in most cases makes sense to easily track and use an actual expense. But foods can be a little bit tricky. That's why I do like the idea of being able to claim per dime for food expenses. And I think many of you guys are probably loving it, right? Imagine if you're S corp or a partnership or C corp and don't have to worry about receipts. I mean, that's just wonderful for compliance perspective, right? So I definitely love this idea here. Like I said, so no receipt tracking, simplified expense reports, tax free up to federal limits, easy to budget. If you're a small business owner, this is perfect. Now, one thing we have to keep in mind is this per dime rate is different for each area, not each state, each area. Like, for example, within the Texas, Dallas, Houston, Austin is $80 per day, San Antonio is 74 versus other places might be 68. So you do need to do a little bit of a work. That means you do need to ask your employee, where are they going? So you do need to keep some sort of tracking for that. And then you need to figure out what the per dime rate is. So it is a little bit administratively an extra step, but for an employee it's fairly easy. Like San Francisco, $92 per day for food. Los Angeles, $86 per day. Other area of California, $68 per day. So you might be saying, Deepak, are you saying that if I'm traveling to San Francisco Bay Area, am I able to, write off $92 per day? Yeah, that's exactly what I'm saying. That's what the per dime rate is. Now, keep this in mind. This is for certain dates and it changes all the time. So you do need to check what the current rates are. So how do you calculate this? Well, you go to gsa.gov and then you ask, where are you going and what the current rates are. Keep track of those. Now, one thing you have to keep in mind is when we're traveling, when you're flying out, and then you're flying back in. So the day you fly out, you're not going to claim 100% of your deduction. You're going to claim 75% of whatever the rate is. So if the rate is $100, you're going to claim 75 bucks. Same thing on the day back. Why? Because the idea here is that you're not really traveling for business for 75, for 100% of the time. So we don't know, are you traveling for 5% of the time, 10% of the time? LS is nice with us. So they say, look, we're going to let you take up to 75% of that deduction. So that's pretty cool. So I give you guys an example. Let's say if you're traveling to San Francisco for 4 days, that's $92 per day. But you cannot take the entire 92. Day 1, 69, day 4, 69, but the day 2 and day 3, we can claim $92 each day. So that gives me a deduction of $322. Now, remember, this is only for food. I can still write off my, my car expense. I can still write off my lodging. This is purely for food. Not bad. How I write it off will depend upon what my entity structure is. So you have to be very careful with it. The same rule is not going to be applicable to all of you. Some of you have C Corp, some of you have S Corp, some are partnerships, some are disregarded entities. Some of you guys have employees, some of you don't have employees. So there are a lot of variables to it. So we have to be careful. So I'm going to walk you through some basics that might be of help to you. So C Corp. I love C Corps because C Corps is pretty straightforward. You can deduct the per dime as a business expense. So if I paid $300 to an employee for an expense, they get it completely tax-free, and I get a full $300 deduction. Isn't that wonderful? They don't have to write it off they don't have to include that as an income on their W-2 or anything like that. No 1099, nothing. I just simply write them a check and I record it an expense in my books. We're good. So you can use it for employees, and here's the beauty. You can also use it as an owner. So if you own a C Corp, this is a great way to write it off. That means every time you're traveling and you don't want to keep track of those receipts for your meals, and remember, meals are only expensable up to 50% anyway. So this is a great way. You can use that per dime rule. And like I said, it's tax-free to the employee, no receipts required. So fairly easy. All you have to do is keep the travel records, dates and locations. And obviously you got to this is obvious. If you're traveling, you got to travel away from home. So it cannot be in the same city. So I, if I have a C Corp, I can't say that I'm going to write off $80, $90 every single day. I mean, that's just my home. So that doesn't make any sense. But the most important part is you must have to have an accountable plan. All right, let's go to S Corp. So S Corp for employees works the same way. So if you have an employee, they're traveling, you follow the same rules, you're able to reimburse them, no problem. However, for owners, there is a problem. If you are a shareholder, which is more than 2%, most likely you are, then the per dime still works. You can still write it off as a business expense, no problem, but it becomes a taxable income. So not a good idea. Okay. So the better option here is not take per dime. If you're an S Corp, you should write off the actual expenses. So if you're taking a meal, you write it off 50%. If you're lodging, 100%. If you're taking an air flight, airlines, you write off 100%. So you still got to follow those actual expense rules. So if you're an owner, this works better. If you're an employee, then some mix of per dime and the actual expense will be good. Like, for example, maybe for lodging and airlines, you use an actual expense, and for per dime for the meals, maybe you use per dime here. For LLC and partnerships. So for LLC, so obviously LLC can be different ways. You could be single member, you could be multi-member. For a single member LLC, obviously everything goes on Schedule C. So on a Schedule C, there's no question of per dime anyway. You're simply going to write off the actual expenses. So this one is a simple one. On the other hand, if you're a multi-member LLC and you have employees, then you can still reimburse them. Again, same rules apply. You don't have to issue them W-2. You don't have to put them 1099. They still get tax-free, but the partners and the members don't get that benefit. So they still need to record the actual expenses on a partnership. So this is where the limitation. That's where I think if the owners want to write it off, C Corps is perhaps the best entity for them. So if you're traveling a lot and you don't want to deal with receipts and all that kind of stuff, then C Corp comes in pretty handy. Now, some of us, we might even also have non-paid employees. So the question we got to ask whenever we have somebody working for us or include doing some sort of work for us, we need to answer, are they really employee? Sometimes these people could be unpaid interns. Sometimes they could be volunteers. And, for example, you have a board of advisors. Maybe you have board of directors. There could be people who are just voluntarily helping you out with your business. So these volunteers, now remember, these volunteers could possibly be your parents, could be your uncles, aunties, could be anybody else that if they're helping you out with your business, then you can actually reimburse them for any kind of business expense. And once again, that is not taxable to them, not 1099, nothing. Now, for example, if you have your uncle and auntie traveling with you, or maybe they're come visit you to help you out on your project, then you might say, well, I'm located in, let's just say, San Francisco, and maybe they're coming from Seattle. If they're coming from Seattle to help you out, you can still write off their airline ticket. You can still write off their hotel. All of those expenses you can certainly reimburse them for all of that stuff. No problem at all. So this is now, if they are paid, right, that's where the things change a little bit. Because if they're paid, then you're going to pay them either as a W-2 or you're going to pay them as 1099. For example, me. So obviously, if I'm an advisor to you, most likely I'm paid. Now, if I'm paid and I say, you know what, I'm going to bill you for my travel. I want you to pay for my hotel. I want you to pay for my airline ticket. I want you to pay for my food. So I'm putting all of that is a business expense to you because I'm billing you for all that. But there is no question of per dime here because whatever that you pay me becomes my income. And then I need to write off my own expenses. And again, that would depend upon how I am structured. Maybe I have a C Corp, maybe I have a partnership, who knows? So that's my problem, not your problem. So all you got to think about as a business owner is whether the people that you're reimbursing, are they paid or non-paid? If they're paid, then most likely you are not going to use per dime. But if they're not paid, then you can reimburse them for their business expenses. Now, I would not do per dime in that case. If they're not compensated, I will actually do the actual expense. So like I said, actual expense for their airline, actual expense for their lodging, actual expense for their food, all that stuff. So real expenses. And then I'll properly document who these people are and make sure they're sending me some sort of email to justify all of those expenses. And you can reimburse them. And again, they don't go on their W-2. You don't need to issue them 1099. None of that stuff. It becomes your expense. For them, they just get paid. So it's a wonderful strategy. You need to really think about which people are really helping you out. So with employees, you need to have a written accountable plan, consistent policy for all employees. So you cannot pick and choose. You need to have for each reimbursement, you need to have a proper documentation. So this is for employees. Now for non-employees, so if your company doesn't really have employees, then for C Corp owners, you can use per diem, no problem. So it works perfectly. For S Corp owners, per diem, you can still do it, but it becomes taxable to you. That means it shows up on your W-2 income. For LLC or sole prop, once again, there's no question of per diem. You would have to write off the actual expenses and keep track of all your receipts. So what are some of the mistakes that people make? Number one mistake is most people don't have an accountable plan. So if they're trying to claim all this stuff on their tax returns that, hey, I'm reimbursing my advisors, I'm reimbursing my board of directors and all that stuff, you're doing it wrong because you don't have an accountable plan. Number two, you're not really checking the rates. Different people live in different areas. They're traveling to different areas. So you need to see what their taxable home is, and then where are they traveling to, and wherever they're traveling to, what are the current rates. So if you don't keep track of that, it doesn't work. Number three, wrong entity. Sometimes people get confused. They think that they can reimburse no matter what. So sometimes I would see a tax return or P&L or sometimes people just send an email that, oh, I reimbursed $5,000 to XYZ. I'm like, for what? All the pieces are still missing. So we need to make sure that whether they're members, whether they're partners, they're employees, they're advisors, we have to kind of look into it. And then sometimes people use per diem even for non-employees. So like I said, sometimes they will have a board of advisor who doesn't get paid. They're just on an advising role, and they still issue them per diem reimbursement. That is wrong. So if they're non-employees, you got to actually collect the receipts and issue them. You can still issue the reimbursement, no problem, but it has to be the actual expenses. So how to do it properly? First, work on an accountable plan. If you don't have one, I can help you out with a draft. But again, I'm not an attorney, so I cannot do the actual drafting for you. I can just give you a template, and then you can maybe amend it based on whatever it is that you want in your company, or connect with the legal counsel who can draft it properly for you. Number two, make sure you see the rate structure. Go to the GSA website and figure that out. Then train your employees on documentation. So, come up with an idea. Are you going to use the actual expenses? You're going to use the per diem rate, whatever it is, that should be clearly communicated with all the employees and partners, and figure out what the process is going to be. How are they going to get reimbursement? So those are some of the things you want to do. Key things is business connection. Anytime you're doing these reimbursement, make sure you properly document a business connection. Like, why were this person there? What were they really doing? And it has to be reasonable time. So for example, every now and then I'll meet with a client and they'll, oh, I reimbursed them. I'm like, okay, do you have an email to substantiate? Did they claim? Did they ask you for the money? And I'm like, what do you mean? Well, if somebody like, if you're reimbursing somebody, they should have asked you for that reimbursement. You need maybe some email, some communication. Like, oh, okay, I'm gonna just have them write me an email now. Well, you gave the money, in last February, and here we are in April filing your tax return, and now you're documenting it with an email. That doesn't really make any sense. So come up with some sort of rule in your company, maybe a report within 30 days, 60 days, and be consistent with that. And then, you know, employees must return any amount exceeding expenses within 120 days. Obviously, that's not relevant for per diem, but just in case you happen to pay them a little bit more, then they do need to do it. So for each trip, keep a record of travel dates. Where did they go? Which city? Which state? What was the business purpose? If there were like client meetings, who did they met? What the per diem rate was? Total days claim and total reimbursement amount. So this is what you want to keep. Now, there are some unique situations. So, for example, if somebody is traveling for more than 1 year, If they're traveling for more than 1 year, then that place becomes their tax home. So per diem rates no longer applies. So we got to claim actual expenses. And then there are this high-low method. This one is a little bit more complicated. The numbers you're seeing here includes lodging, so I'm not a big fan of it. So I'm not going to cover that today because I think in most cases lodging is expensive, so it makes more sense for you to actually deduct the actual expense rather than the meals. Meals is tricky because sometimes you can find a little bit cheaper meals, especially when you're traveling. And then, like I said, partial day, I already said the first date and last date, you got to do that 75%. Instead of 100%. This one is also a tricky rule. Let's say if you have your employees are going for a business meeting and maybe they're attending a conference and the conference itself is providing you breakfast. So then they need to kind of deduct that from that per dime rate that you're providing them. So those are some of the special situations. You have to keep track of it. So I kind of made a little spreadsheet for you just to make life a little bit easier. You can take a screenshot of this if you want. So if you're a C Corp, tax-free for employees, tax-free for owners. All you need is an accountable plan. You're good to go. For S Corps, tax-free for employees. For owners, it's taxable. It goes on their W-2. For employees, you're good to go. No problem. All right. Now, partnership, multi-LLCs, tax-free for the employees, all good. Owners not allowed, but they can claim the actual expenses. Single member LLC, same thing. Tax-free for employees. If you have employees, owners cannot take per dime. They have to put the actual expenses on Schedule C. Proprietor, same thing. Single member LLC, sole proprietor, same thing. Board of advisors, obviously, they are not your employees, so you don't really care about how they're treated. Basically, you're going to, whatever you pay them, whether it's for meals, for travel, everything becomes part of that 1099. You're going to issue them the 1099 NEC. You should have already done this by now, and they deal with their own tax treatment separately. If you have volunteers, turns, board of advisors, who is not getting paid, those you don't use per dime, you actually reimburse them the actual expenses with receipts. So those are some of the rules around that. So I'm going to take some questions here. I'll be available to you guys and, let's dig deeper into it. But yeah, you're welcome to ask any questions, even outside of these topics. So I'm not going to, tell you to come back later on. But if you don't have enough time today, then you can come connect with me at the next meetup or just reach out to me. Go to taxcodeadvisors.com and reach out to me from there. All right. So I see a bunch of hands. So let's start with Q&A.